...2012 is the most successful year for Britain's Olympians in over a century. Safe to say, though, it's not been quite the same for the country's economy. The Bank of England slashes its growth forecasts once again, and Governor Mervyn King comes under heavy fire for the apparent failure of his policies. I'm Jamie McGeever, and this is today's Market Pulse. Well, let's hear now from John Wraith. He's head of UK rate strategy at Bank of America Merrill Lynch. John, apologies for the Olympic metaphor, though it wasn't mine. Mervyn King himself actually used it earlier today. He said, he was asked at the press conference, is the UK in the midst of a lost decade? He didn't answer. What's your take?
Well, we've certainly lost the first half of a decade now, if you think of where the level of GDP is compared to where we were 5 years ago. And the prospects don't look great, at least for the next 2 or 3 years, let's say. I think, Mervyn King himself has said before that the further we go into this crisis, almost the further away he perceives the end of it to be. And therefore, I think we have to be seriously worried. The market is effectively pricing in, yes, I guess, the rest of the decade that we're now halfway through as having rates either at or very close to their current level, which tells you that no recovery of any meaningful strength is expected to gain hold.
Despite this weakness, though, this obvious weakness, King appeared to take the idea of a rate cut off the table. Sterling bounced and 2-year UK gilt yields also popped higher.
Yeah, I mean, I think we need to differentiate between him playing down the prospect of a rate cut because he's feeling more upbeat about the outlook, and playing down the prospect of a rate cut because, to an extent, he and others on the MPC think it might do more harm than good. And the reason he downplayed it was the latter, that they think a rate cut would, among its other impacts, squeeze banks' margins and therefore be somewhat counterproductive. He also made the point that a 25 basis point rate cut, which is really all you could expect from the current level, isn't really going to make a great deal of difference, frankly, in the grand scheme of things. So the market had been strongly leaning towards the prospect of a near-term cut. Downplaying that, as you say, just led to a reasonable backup in front-end yields. So
no rate cut. The impact of further QE is limited. King himself questioned the effectiveness of the funding for lending scheme. The BoE is a bystander on Europe. It seems like King and the Bank of England are kind of throwing up their hands and say there isn't anything else we can do.
Well, I think in all of this, they've tried in a fairly diplomatic way to say, all we can do really is be a counterweight to the situation in the Eurozone and the impact of that and the fiscal tightening in the UK, and just try and keep the economy from rolling backwards. And, they're just about achieving that. We're sort of treading water if you look through the volatility from one quarter to another. Now, that may not be particularly encouraging, and it's certainly not something that they would either have expected or wanted a few years ago. But the reality is the Eurozone remains a very serious problem. Yes, they are bystanders to an extent. I think they would argue they're doing what they can. They don't have a lot of tools at their disposal when rates are down here, and QE remains one of a very limited number of options available to them. But, if it's better than nothing, they will carry on with it. And we're in the middle of a programme of QE, and we think, and the market also appears to think, that more will be forthcoming in November, even if it's not any more seen as something that's going to be a big game changer. At least it's something that perhaps prevents an even worse outcome. OK, just to finish up, where does sterling go from here? Can it continue those gains? And how do you trade gilts against treasuries and bonds? Well, we'd say sterling can certainly strengthen a bit further against the euro. That's more a story of euro weakness than sterling strength, to be honest. We think it's going to remain fairly steady against the dollar in this environment, and particularly if they don't cut rates, that should be somewhat supportive of sterling. And as for gilts, they have been strongly anticipating more QE. They've outperformed a lot against bunds and treasuries of late. We think that outperformance may be coming to an end. We're getting to fairly extreme levels of valuation, and once we get certainly beyond the end of August, we get a big pickup again in supply in the UK, which might undermine gilts. So we think it may be time to fade gilt strength against those other markets. OK, John, thank you very much. Thank you. Well, our chart of the day looks at US yields, which have been bouncing back from their lows over the past 2 weeks. Technical strategist Valérie Gastaldi of Day by Day in Paris, though, says the turnaround looks far from convincing.
You can see that the bounce is really not convincing. It is very soft. There is no strength to that bounce. So the best we can expect on US yields for the time being is remaining between 138, maybe a little below 130, but there is not much room to the downside. And then moving back to 167 to 170. But basically, there is no major change to be expected for the coming months on US interest rates.
That's all for now, but do keep up with us on Twitter @Reuters Insider and join us at this time each weekday for a snapshot of what's moving on financial markets and why. I'm Jamie McGeever. This is Reuters.